Hi, everybody. We're going to wait a few minutes and allow others just have a couple of seconds to join, and then we'll get everything kicked off. But thanks for joining us today. Hi there. For everyone who is just now joining, we're going to wait just 1 or 2 more seconds to allow others to have a time to get into the webinar, and then we'll kick everything off. Awesome. Hello, everybody, and thank you all for joining us on our webinar, How to Find, Understand, and Measure Your Product Market Fit, with speakers from Pendo and Zendesk. We're super excited. We have some awesome content lined up for you all, and we're really excited to share it with you all. So my name is Tyler Crumpler. I'm on the marketing team here at Pendo, and I'll be your moderator today. Before we jump into some of the content, I just have a few housekeeping items that I wanted to go over. So, first of all, this webinar is being recorded. We will share this with everybody who registered for the webinar within 24 hours of the event. So be on the lookout for that, and feel free to share that with your colleagues who maybe weren't able to attend or didn't register. Second, if you're having any technical difficulties, myself and a few others are on this call. We'll be able to help you address those while the presentation's in flow. You can just use that chat feature, and we'll, kind of help address those. And also, just finally, we're going to have a Q&A session at the end, so you can actually ask our amazing speakers some questions around their experiences, the content, all of those things. So, but that doesn't mean you need to hold your questions until the end. You can go ahead and drop those in that Q&A function that we have on the webinar, and we will address those as they kind of come in at the end and in the order that they came in. And with that, let's kick things off. So just brief agenda here. We're going to go through some introductions. We're going to look at what is product market fit. We're going to go into a little bit of how to measure product market fit, some of the best practices, and then, like I mentioned, we'll roll into that QA. So with that, I'm going to pass things over to our amazing speakers, Mike Gozzo at Zendesk and Eric Boduch at Pendo. Mike, do you want to introduce yourself really quickly?
Sure. Thanks, Tyler. So my name is Mike Gozzo. I am a VP of Product at Zendesk, and I take care of everything that we do on the messaging side. Before Zendesk, I led 2 startups, both acquired. The most recent one, Smooch, that Zendesk bought, was a platform for building messaging focused on developers. Think of it kind of like a Twilio, but before Twilio was really ready for messaging. So, try and bring a lot of points of view on how product market fit affects B2B software companies in particular.
Hi, and my name's Eric Boduch. I'm one of the co-founders of Pendo. I've had a pretty diverse background at Pendo. Ran marketing for the first 4 years of Pendo, took over as our chief evangelist, and helped build out our external community and our brand presence. And currently, I'm GM of our Adopt business unit, which is a white label OEM training product that we sell in conjunction with our software partners. So it's kind of my first step into a really strong revenue role. It's been a great experience. Before that, did a bunch of startups and public companies. I was VP of marketing for a public company in the Valley. Also did a couple of startups, both out in San Francisco and Pittsburgh, ex-Carnegie Mellon alum, well, Carnegie Mellon alum, not ex, and now live in Raleigh, North Carolina. So I've traveled around the country too. It's been interesting seeing how product's done at different places too, right? There's distinct differences in product management, I think, between places like Pittsburgh, San Francisco, and the East Coast. So with that, I think today we want to talk about product market fit. And Mike, do you want to kick this off by explaining, the Andreessen quote here?
Absolutely. Finding product market fit is probably one of the most important things that you're going to focus on Whether you're running a startup and involved in the trenches, or you're part of a bigger company that's bringing something to market, you're going to obsess about not only does your product do the thing that you designed it to do, but can it reach the market and satisfy their needs? So can you hit that intersection of product solving the problem and delivering value to a customer in a way that is, repeatable, and you can grow into a sustainable thing. Really great post by Mark Andreessen on this, and he's done a lot of writing on what product market fit is and what it isn't. So maybe we'll go to the next slide, Eric, unless you've got anything to add. There's some.
No, perfect. I mean, there's a lot of different ways to think about product market fit, and some people will say, does it even exist, right? One of my friends, colleagues, April Dunford, likes to say that there's no such thing as product market fit. I believe there is, but I also believe that you need to think about product market fit, not necessarily as this checkbox, right? You just don't achieve product market fit and it's all over and done with. It's kind of like, it's something that you have when you're in it, but it's also something that changes over time. So when we talk about what product market fit is and how we define that, it's almost like this time when the customer and product are in agreement, right? Or your customers become your sales and marketing people. There's a great video out there on crossing the chasm that I used to, when I lectured at Carnegie Mellon, I was always show, and they were talking, they had this guy dancing, and he's dancing all by himself. And he's dancing really weird, and it's kind of funny, and people are pointing at him and chuckling, and then he just keeps it up. And soon there's like another guy that joins him. And I think of that as like the first customer, right? That's really there. And then you see like, there's not quite product market fit there, but they're starting to get people watching that and thinking like there's something really here. And then you start getting a couple other people there, and those are the early adopters. And the next thing you see is that there's a ton of people dancing. And now all of a sudden you have this product market fit. You can see people like feeling like, holy geez, I don't know if I can swear on this webinar. So holy geez, I need to jump in there. I need to be involved in this movement. And that's kind of like one of the things I think about is that first step of product market fit, where all of a sudden like customers are like, why aren't we doing this? And that's when you know you have something. I don't know, Mike, what else would you add there?
Yeah, I think that's a great point. You'll see that customers are beating down the doors and want this, but sometimes it's not so obvious, especially when you're in B2B or you're in something which doesn't necessarily have mass appeal necessarily. You might be building something for the enterprise or for a developer market. And what you're going to see is that while you might not have people beating down your door because you're building an expensive or hard to understand piece of software, experts in the field will start talking about it. It's going to start becoming a standard. You're going to see that your customers are coming because two developers shared a beer, and one of them spoke about a technology that they were using that revolutionized how they were doing their job. So someone else picked it up, and you really get this flywheel going. And a lot of it is really looking for and really feeling that this thing is a chain reaction that's out of control, and that's ultimately what it feels like. I think another piece of thinking about that flywheel and that chain reaction is that it can come and go. And there's going to be a lot of factors, both in changes of the market. You can think like technology landscape changing, or changes of who your target customer is as you're trying to grow your business and reach a larger market. What worked at one moment in your product's life cycle might not necessarily work in the next. And as a business, you're probably asking yourself all the time, when should you reassess product market fit? When is it time to rest on your laurels and juice the machine, versus when is it time for you to go and really go back to that experimentation that got you to a point where you felt confident that your product was ready? The answer is you're always going to be working on this. Congratulations, you're a product manager. This is now your job, and it's probably what makes this most exciting. Eric, do you have anything to add on that?
Yeah, I mean, I think about this, and we were chatting earlier about this whole love analogy, right? Product market fit, it might be an interesting analogy to think about it as love, like, when you're in it, but people also fall out of love, and you can also lose product market fit. I do think that happens. So it's not this checkbox. And maybe a great story is like this idea of a horse, right? If we go back, in time, pre-cars, horses had product market fit. They existed, right? They solved a need for their customers. People were happy for the most part with what horses can do. Now, the competition in this case changed things, where a car came about and all of a sudden just changed what market expectations were, so that a horse didn't have product market fit necessarily in all of those particular markets. So things can change over time. It can change because of competition. It can be changed because of how the market's changing. It can change because of bigger macroeconomic kind of events. So it's something you have, but it's also something you can lose. So when we think about like, next obvious question is like, when startups are thinking about product market fit, what are they doing to get there? Are they just, throwing a product out there and hoping it works, hoping that customers love it? I mean, I hope not, right? So we're really looking at, and what they should be doing is a lot of experimentation, iterating on what the product does, the features it has, the functionality, and pivoting the product as they learn from their customers. So think of this as a really fast, scientific experimentation cycle where you're trying to get a product out there. You think you have something that's going to fit the needs of your particular market. And then you're adjusting based upon usage, based upon customer feedback, based upon a lot of things. And pricing could be one of those factors too. So it's constant feedback on experiments. It's constant innovation. It's constant iteration to going and creating that product that fits into a particular market. And some of that is just addressing a different market. Like you might have a product that you're just taking to the wrong market. And if you take a great product and position it in another market, you're going to find that product market fit. So there's a mix of things at play when you're trying to establish that initial product market fit. And like we talked about, that changes it too as your market expands. So this is an iterative cycle. I mean, I think one of the most essential things that product people can do is communicate, right? Is be in contact with their customers, be getting feedback from their customers, be looking at data, and then experimenting on that, right? And using that as a basis for innovation. So, one of the things, Mike, then is this, like, how do you balance customer input and gut decisions to do that, right?
Yep, no, that's a great point. And I think one of the important aspects of finding product market fit that we don't often talk about is the need for, call it intellectual honesty, right? It's really easy when you're building a product and it's your life and you've put your own identity as a product manager or a founder into defining what it is. You really ignore some of the obvious things that obvious signals you're getting, whether it's feedback in the customer's own words or dynamics of, your revenue or whatever other important metrics you're tracking around engagement, and saying, well, if I could just do this one thing, if I could just build this feature, if I could just add this one capability, I'll be closer to product market fit. What I've seen happen to other startups that I've advised is that they can fall into this trap of really circling here and piling, bad investment ideas, bad decisions, one on top of another, because they're not stepping back and remembering that their purpose is really to really look at where they are as a product and make sure that it's meeting meeting the needs of product market fit by questioning the core assumptions. And you really get there, when you start. Go to the next slide, please. If you're doing that well, what you're going to start feeling is that the market is really pulling this product out of you. Your roadmap is going to get significantly easier in one side, because that early base of customers that's just coming and pulling your product out to them is going to be driving strong requests because they're using it every day to solve an important problem to them. You're going to see those customers talking to one another and referring other customers to you. One of the things that we saw quite a bit at Smooch was that we were getting a lot of inquiries from investors the minute we started to hit this product market fit threshold. And what was interesting was that we weren't out there fundraising. We were in like a closed door state of our business, just building product and growing. But our earliest customers were getting funded by popular VCs. And when they would ask these customers of ours, who do you use? What tech is interesting out there? They'd point at our company. And that was a really big sign to us and say, okay, this referral engine is real, and it's hitting many things about our business, not just our sales, but also, really the core value of the company. And you'll notice that it's not that your product is growing exponentially without advertising or without marketing. It's just that your dollars seem to go further. You figured out the message that you want to put out to the market that resonates. You figured out how to reach your customers in a great way. So for every dollar you spend in advertising, in user acquisition, you get a return that is, again, this is going to be relative to your segment and your product, but feels huge and off the charts. And that's when you're really in a position to claim product market fit and be ready to invest deeper into the business and get to the next stage. Eric, do you have anything to add there?
Yeah, just to kind of pile on with some of the things you said, like, because I was running marketing early in Pendo, right? All four of our founders had a product background. So we all couldn't run product. In fact, none of us ended up running product. But as an aside, so I'm running marketing, and I saw this firsthand where I would be spending dollars on lead gen, and I'd be comparing my returns to some of my peers in the industry. And I was getting 3 or 4 or 5 times the amount of, closed deals out of the same amount of spend. And it wasn't because I was a genius and just this great marketing guy. It was because it was so easy to get leads for our product. And get those referrals and get people in our customers referring other people and driving them to the website, and in essence getting free business. It just kind of snowballed. And similar to Smooch, we saw this with Pendo in the early days, where we also got VC referrals that would come in that way. Like the reason we got Battery in as our A round, as our primary original venture capitalist, was a customer. That one of the people from Battery was talking with, one of the companies down in Austin that was a customer of ours, one of our early customers. And they were like, what do you really like? What technology is really cool that you're using? What's making a big impact on your business? And they're like, Pendo. And that led, those types of conversations didn't just lead to customers. They led to VC interest. They led to coverage. They led to employees. So you see, like, when you have this fit, when you have these people really excited about what your product does, when it makes their life easier, they end up becoming great cheerleaders for you. And it impacts not just your revenues, it impacts all these different portions of your business, which is just awesome. What I would caution people do, because having talked to some of the startups out in the Valley from time to time, they're like, yeah, when I have product market fit, I don't need salespeople, or I don't need marketing. And that's bad. Take advantage of what you have, make those jobs easier for you, but you're still going to need, strong people in those departments. So don't over rotate on this idea that having a great product is going to do everything for you and solve all of your problems. It definitely helps. It makes everyone better. But don't over rotate to the point where you're like, oh, I'm getting all this business without any marketing, therefore I don't need to do marketing. Just think about how much better your business would be with, marketing and professional sales and all that kind of stuff.
I think that's a really great point, just to highlight. When you have product market fit, it's not just that the product is ready for the market, it's really your whole company. And as a startup, there's probably not much more to the company than the product, but you probably have some beginnings of, operations and other aspects that are showing, and you have to fire all those cylinders right to make it work. You can't just only obsess about product.
Yeah, absolutely. It's a good indicator for when you're ready to scale. It shouldn't be like, hey, product's working, we're selling it, they're buying it through our website, therefore we don't need to do any of these other things. No, it's like, therefore we can do these other things. Instead of going 2x, we should over year, or 3x year over year, maybe we're going 4 or 5, right? It's a great factor for thinking about, okay, now let's really go after this marketplace. So 2 really interesting examples. I get to talk about Slack, which is fun. And I'm going back to my Pendo history. I remember early on in Pendo, we were using a Slack competitor, and it was primarily used by engineering. They were trying to get the whole company to use it, and just never stuck, right? The UI wasn't quite good enough. It didn't feel like it felt like part of your everyday cycle. There's a lot of little things. Like, it's even hard to point to what the big thing was, but it was just a collection of a lot of little things. And then one day someone started using Slack, and I think it started in the engineering group. And then within like 2 or 3 weeks, everyone at the company was on Slack. And we weren't a big company at the time, but I can think the competitor we were using for like 3 or 4, maybe even 6 months. I don't even know. And it never really caught on. But now all of a sudden, we started using Slack and the UI was so slick and it was so easy to get onboarded and invite other people and set up your own channels, have these communications, have them searchable, find this information. Every little detail, seemed really cool. Even the sound back then, which now I have a Pavlovian response to, and some people absolutely hate. But the sound was just something that is like that old HBO music when the HBO movies are coming on. I'm dating myself here, and it's like, oh, cool. It was just everything about that Slack experience turned our own people into word of mouth marketers for them. They were getting everyone inside of Pendo to use it. And then we were talking about to other companies like, oh, are you using Slack yet for this communication? And at the time, this was really early in Slack, so a lot of people hadn't heard about it yet, but it was like, it just kind of spiraled. And that whole word of mouth marketing was really, really effective with Slack and kind of, grew, especially through tech, very effectively through that. Another great story is Netflix. I think you're going to talk about that one, Mike.
Yeah, no, Netflix is really interesting because if you've been around, especially in the US and Canada, where I am in Montreal, we didn't get to benefit from all of Netflix stories firsthand. But they started off as DVDs sent in your in regular postal mail to your address. You pick out a set of DVDs you wanted to watch in that month, they'd send them over to you and you mail them back. And it was pretty easy. They got a really good base of subscribers. They certainly weren't the behemoth that they are now, but they were giving Blockbuster and Friends a run for their money, to be sure. I think it was around 2010 or maybe probably more like 2011 where they started to introduce streaming and thinking about splitting off this DVD rental business that they had built from streaming, which was the future. When they first did this, they had a product that arguably had product market fit, their DVD rentals, and now suddenly they were telling customers that streaming is the future, but they weren't ready to claim product market fit on that streaming product at the time. Why was that? Well, one, consumers had to, at the time, consume streaming content on a PC or maybe on their phone or a tablet. They couldn't do it on the big screen so easily. You'd have to hook up HDMI cable, whatever other mess was involved there. And then internet broadband was there, but from a streaming quality and performance standpoint, the core technology hadn't penetrated enough, and there was all sorts of content restrictions around should we make streaming available or not. They had a ton of negative feedback about the streaming offer at the beginning, but over about a 2-year period until they launched House of Cards, they really got through those problems one at a time and listened to their customers and positioned streaming correctly as the platform for the future. And that's really when it took off. And now we wouldn't even think about consuming content any other way, it seems, right? And streaming has become quite a revolution. So it's a good note that even for a business that seems to be a rocket ship like Netflix was, and that has that pull from the market, you need to be thinking about reinventing yourself, figuring out what's next, and bringing back the same techniques of experimentation and iteration at all the steps through your journey, not only at the onset. You don't get to rest on your laurels ever.
So why does all of this matter? It's a good question to ask, right? What's important about this? And we all want to address with our products. We all want to start companies. We all want to work for companies that address a really big marketplace. But a large potential marketplace, isn't worth anything unless you can realize a chunk of that market, unless you get this flywheel going. And like I hinted at earlier, product market fit is a good point for that springboard for scaling and growth, right? When you see these things happening, when you see customers just clamoring for your product, when you see that you're getting feedback like, I would hate it if you take this away from me, that ends up being like a trigger point where you can think like, okay, I have something here that the market really loves. Let me push this out aggressively. Let me grow really aggressively, because there are a lot of impacts if you scale too quickly, right? Mike, talk to me a little bit about like, what are the possible impacts from scaling too quickly?
I touched on a little bit earlier when I was talking about intellectual honesty and the bad investment decisions that you can fall into. If you put dollars before your business, put dollars ahead of your business being ready to really make the most of it. So I think One of the core ways is that you end up paying way more for a marginal improvement in your traction, for example. So if you're doing paid acquisition, like Eric was referring to earlier, and you haven't really quite figured out your business, you're going to be spending a lot more money to get every one of those deals on board. And you might actually be growing your customer base at a cost that is negative to you, where you're losing money with every customer that you're bringing on through the through gate, because acquisition cost is so high. Other things that can happen is you might build out a whole bunch of features to meet one client's needs, or to chase a red herring where you weren't really ready to invest that much in product development, and as a result, you'll burn capital that you could have used to keep your business afloat longer, experiment more, and be ready for an opportunity that can be more beneficial to your company.
Yeah, I also think about it as this rush to sell, right? Like sometimes there's this pressure to get revenues. So, you think you're better suited to a market and the market's ready for you. So you start hiring salespeople, and you don't just want to hire one because, well, one, it's hard to tell. Is it the salesperson? Is it the product? Is it the marketing? So you want to hire a couple, and then you hire a couple and none of them are making quota. And then they're disgruntled because they're not making money. And so they're looking for jobs, and now you have to replace them. And not only do you have to replace them, but they're like, oh yeah, you don't want to work at XYZ company because you can't, make good money there because the product's not ready, or the market, or it's too hard to sell. So you start creating all of these problems for yourself that you don't really need. You can create, I think, more problems in trying to do things quickly than you create, and maybe even waiting a little bit too long to scale things up. I mean, you want that balance, but if you start doing things too quickly before you're ready to actually scale the business, you end up having to unwind all of this stuff, and it creates it dampens that halo that your company might otherwise have, right? You kind of are a little tarnished, and you have to work your way back from that.
Absolutely. I'll throw in a personal story from my last startup. We had raised about $8 million from investors. We were pretty transparent that we didn't know the path to monetization, but we had a guess and we had money in our pocket. So we went out and said, okay, we'll test an idea by hiring a team of inside salespeople and have them call up a bunch of businesses and try and push our software. It didn't work. We lost a lot of money, but more importantly, we lost a lot of time in the process. And the true cost to our business wasn't in dollars. It was really in terms of time and missed opportunity. And I keep on going back to thinking, well, how much different would our product have been if we had prioritized learning instead of that rush to sell? And that it's a really hard thing to ignore when you're in the trenches. But a good thing to do is always go by your gut and try and learn before anything else.
Yeah, it makes me think too as an entrepreneur, because I have similar stories, Mike, about selling too early. And sometimes being pressured by investors, like, oh, we need to start selling, like, I think we should start selling early and the market's going to tell us by sales. And so you get pressured into that in some cases. And I think it's important to have investors that have the same kind of experimentation and product-led philosophies. And the worst thing too is if you start to get a little bit of traction, right? We've all seen that, like you hire these inside salespeople and they get a little bit of traction, but not enough. And you're like, well, maybe we just tweak this a little bit. Maybe if we had this feature or that feature, and then you start getting feature bloat too, because now all of a sudden you're like, oh, this customer says he wants X and he would have bought. So then that's not always true, when you're getting this closed win feedback. So you start building things that maybe you wouldn't normally have built because you're trying to chase that sale that you lost, and it's a data set of one. So it is another case of this snowball of potentially bad decisions by trying to scale and push product, before you're ready.
Absolutely. And I think it's important also, especially if there's any folks in sales on this webinar, I actually think sales can be a really, really important tool for finding product market fit, but it's not hiring a bank of inside salespeople and trying to build a scalable, repeatable machine. What you're really looking for is, that unicorn salesperson who is really got a long-term business development mindset and is going to work with product, with your product marketing, with the founding team, ideally a member of the founding team, and is going to go out there listening to customers and try and build this capability up. There's a lot to be said for someone who has that kind of empathy and that ability to reach out to the market and communicate one-on-one with prospects. So sales absolutely has a role here, and please don't take this as Eric and I dumping all over sales and saying they're an impediment. They're not. They can be huge partners, but you need to set up that function in the right way and have the right mindset for what they're going to help achieve at this stage in the business.
Yeah, absolutely. I'm a big fan of having sales and scaling sales when it's appropriate and getting the right people. And I think one point you mentioned, Mike, I think worked extremely well for me and companies that worked well, which is having the founders sell, right? Especially if you have a larger founder team, like we had 4 at Pendo, 3 of the 4 founders were selling. I mean, even though I was running marketing, I think I gave more demos in the beginning of our company than anyone else. I was like booked with like, hey, let me show you the product. Let me get feedback. Let me get the pitch. And I would hear, it helped me with marketing too, because I would hear exactly what people got excited about, what they didn't, what made them want to buy, the problems they started talking about in their own business. And it just helped in so many different areas. So like having that founding team go out and actually pitch customers and try to sell was hugely influential and helpful in how we molded what was the Pendo product in the early days too. So I think, you definitely want to be selling and talking to customers. I just think you don't want to be like, hey, now let's hire a big professional sales team, a bank of SDRs, and like, let's grow scale this until you have that fit. I do, and I know there's a lot of engineering and product founders out there that maybe don't like to sell. I think like that's one of the things you got to break through. It's like spend some time out there with customers, spend time selling. You're going to learn so much from that.
And you'll be surprised at how good you are. I am a technical founder. I was the CTO of Smooch, and I spent, after we got the product, MVP out the door, my job pivoted to essentially being the best technical salesperson in the company. And you'll be surprised at how good you are at this, even if you have that background.
And it's inspiring too, because you talk to customers and they're like, oh, this is great. And it's like, the whole rest of your day, you're like, sweet, it like inspires you to get all things done. And it's just awesome. Makes you feel good. Gives you that little adrenaline rush. So moving on to measurement. I feel like we could have talked about some of that all day. Let's talk a little bit about how to measure product market fit, because we don't want to be out there as like, hey, it's a feeling like love. You're going to know it when you have it, which is kind of true. But there are guideposts out there that you can use to understand if you're moving towards product market fit. We can jump into that with the next slide here. So let's talk first about the quantitative guideposts. So, right, like we've hinted about acquisition. If you're finding it's really easy to acquire new customers, that's a great sign. You want to see these low acquisition costs. If you find that, activation is really easy, meaning like your customers are signing up for it, maybe for a free trial, and they're turning this on really quick. You don't have to push people about installing it. You don't have to follow up with them. They're getting this activation process is really short. That's a good sign. Revenue, right? Obvious indicator. People are paying for the product, but the most important thing, in my opinion, is not the initial revenue. Because if you do a really good job marketing, if you're like Mike out there and just really good at selling to some of these early adopters, you might be able to get people that are on the fence to buy. What becomes really interesting to look at, and you won't know this as early if you're doing annual contracts, you'll know it quickly if you're doing monthly, is this churn factor. Because one of the biggest indicators, I think, of having a strong fit is that customers aren't churning, right? They're just not churning at all in the early days, because you have, you're getting those early adopters, you're getting that early market, and they're probably really tight fits. So you're not seeing a lot of that churn. And that's probably a bigger indicator than even this initial revenue and this initial sale. It's that retention, it's that churn. Next is qualitative. You want to run with that, Mike?
Absolutely. I'm a big fan of using qualitative feedback to establish this, especially early on. Like I mentioned earlier, since product market fit isn't binary, it's possible that you can have it even in your early days and have a moment that signals you should be investing more. And you might not be getting clean metrics yet that you can really use to drive decision making. So the most important thing that you should rely on, and something that I bring in all my teams, whether it's at my startups or now at Zendesk, where I manage many more people, is really taking in customer feedback as the most important thing that we do in a product organization. So couple of things matter here. First is you need to store it all in some place that's centrally accessible that everybody can have access to. And you need to get into the habit, and this is a place where you need to beat your sales team, over the head with. They need to be following the format and the system that you've put in place to document and capture this feedback, ideally in the customer's own words as closely as possible, and decorating it with as much context as they can. Then what we do in our teams is we make sure that every product line has a board of the PMs on that product line, along with a rotation between a solutions engineer and a salesperson, as well as a representative from marketing, who look through the newly received raw feedback every single week. They take a look at this feedback. They try and extract the core themes and ideas without like getting into specific, build requests, but like what's the problem this customer is actually facing. If we need clarification, we task sales or we have the product person to reach out and get that clarification if it's interesting. And it becomes so important to keep this top of mind and on top of everybody's radar. And you're going to see that the type of feedback that you get changes with where you are on that product market fit spectrum. When you don't have it, you're going to get pretty silent customers. It'll be like me talking on this webinar where I'm speaking and I don't have any idea of what feedback I'm getting from the audience because it's unknown to me. And you wonder, like, are they paying attention? Are they using it? Or, are they engaged? But when you have product market fit, you see this feedback come in droves, and it comes in from all sides, and managing it becomes a really important task that you do. So you'll learn a lot just by taking a look at the quantity and the types of things you're getting coming in that feedback loop. Now, some more traditional things you can use that maybe even start to look quantitative are survey questions like NPS, and looking at how many of your customers are promoters versus detractors. Obviously something that you're going to want to see. You can't read too much into it because as a metric it has its shortcomings, but it is interesting to get a barometer in terms of the referability of your product and how well people are willing to rep it. One that I've used in the past and has given me a bit of a red herring at times actually, but I still believe in it, is asking customer bases how they would feel if they could no longer use your product. Now, this is really valuable because if your product's great and it matters to people, they're going to be really, really disappointed. And I think the threshold that people use to talk about this question often is saying 40% of your base should feel this way. People should feel really sad if they can't use your stuff anymore. It's tricky for a couple of reasons. One is when you ask the question, especially when you ask it, call it in an email or part of a Google form, people read into it and they start saying, wait, are you taking this product away? Every time I've used this question on a survey, I get some, non-negligible set of customers who come back to me and are legitimately afraid that I am going to kill the product, and that, that's what we're doing. The other aspect is sometimes what your customers think is your product is not necessarily what you think is your product. And it's a tough thing to articulate, but you'll find that for, if a customer is using, call it like a subset of functionality of what you're doing, or they're applying it to an industry or a problem that you really don't have eyes on or don't really understand, you might be thinking, hey, great, based on my understanding of what I built and who my customer is, I have product market fit. But those customers that said that they would feel disappointed if it would go away are using it for something completely different or have their own perception about it. So really, really important that whenever you look at some of these aspects, you try and color it with as much context as possible. And then, on the referral and review side, this is, again, something you're going to see. Like you'll notice in your acquisition funnel the source of your customers. You'll get a sense of how it's happening. You'll start seeing, review sites are one place. If you're in more in the enterprise space, like I've been, you'll have analysts that are coming to you inbound with questions because they hear it or because they have inquiries that their customers are making. And again, you have to take all of this stuff with a bit of a grain of salt because there's all sorts of schemes and payola and weirdness that happens. But you do have a directional indication of where you're going and how it matters there. So let's drill in a little bit more on the importance of customer feedback. Yeah, I think the questions you're trying to answer are primarily who the customer is. You want to figure out what that segment of the population is like. You want to know as much about them in terms of what's their job, where do they sit in the decision-making process around using your tool or not. What are their biggest pain points? So what are the problems that you're solving well now, and what are the pain points that still exist that we might be blind to? How are they using your product? You want to go over the shoulder wherever you can or get real life examples here. One is because it's useful for you in building your own marketing, your own case studies, and talking about your product, but also because you want to build that empathy with them and make sure that the features you're building, the design and overall goodness of what you're shipping is in line with what your customers are expecting. And you can really dig into this more and more, right? Like ultimately it becomes an important place to source ideas for your roadmap. It becomes an important place to design your campaigns when you're going out and doing advertising and more. And also an important way to figure out when you're penetrating a new account, when you're going and actually doing outbound sales, to understand how to navigate that organization, how to, get a cold email or a cold call reply to. All of this comes from knowledge, and the knowledge of the customer that you get from this actual discussion and this feedback collection really helps influence this. But one caveat here, or a couple of caveats here that really matter is, again, making sure that you don't treat all feedback as equal. And the customers matter a lot to your business. And they're not all created equal. I want to give that quote from Animal Farm, but it's escaping me right now, but there is a good Orwell quote on that, right? You want to look at people that are using your product every day, every month, that really depend on it, versus those that have flirted with it but haven't really embraced it, and look at those two groups differently and really think about how you want to take that feedback and how you want to affect what you're doing. You want to look at how much people are paying for you, just to understand whether them paying you could be a sign of the relative importance of the problem for them and might make you zero in there. But again, this is going to depend on your business model, right? Sometimes your free customers you really want to pay attention to, particularly if you're looking at making sure you have a compelling path to get them to convert to paid or otherwise. Eric, do you have anything to add on customer feedback from a Pendo perspective?
Yeah, I wanted to double down first on segmentation, right? Like, I think it's really important that you segment your feedback and you're able to segment it across a number of different variables. Like if your primary user is product manager, your secondary users are customer success, and engineering is just there to install. If you're getting, say, NPS from all of those and just looking at the overall NPS number, it's in some ways misleading, right? So you want to be able to break that down and say, like, what's my NPS with the product managers who are my primary users? What's my NPS with customer success who are my secondary users? What's my NPS with engineering who's just involved to install it? Not that you don't want to keep the engineers happy, but you want to take that NPS, that score, and you want to understand it in relation to their involvement in your actual product, right? That's really, I think, really, really important that we highly emphasize that. The second thing is a lot of these metrics, NPS is a great one, is like, the absolute value isn't necessarily as important as the trend, right? NPS numbers are going to vary from industry to industry. Your customers, people are going to give different feedback based upon kind of who they are, what types of people they are, what segments they fit in. But what's really important is how it trends. If you see your NPS number going down, that's an indicator something's going wrong, right? If you see that number continue to go up as you add features or evolve your product or experiment, that's a good thing. So I would concentrate on trending in a lot of these factors more than anything else. Going to that, as I like to call it, the superhuman question. I'm not sure if Rahul and Superhuman first did it, but this, like, what would you do if I took away your product, right? The trending of that is really important, right? As you're evolving that early product, as you're changing that, if that number is increasing dramatically, it feels like you're in the right direction. So use these qualitative metrics as guideposts. Use this feedback as guideposts. If you had a lot of negative feedback about your user experience and you're getting positive stuff in the future, that means you're going in the right direction. So trending, I think, is something to keep an eye on, even more so than the absolute numbers.
I think that's a great point, and it leads us well into the next topic. Focusing on trends of these observations is a really interesting way to realize that product market fit is not a single point in time. We spoke about the Netflix example earlier and how Reed Hastings transformed that company into into what it is today by reinventing itself. And we're all doing that at some scale in our businesses. And on the next slide, I've got a good graph from a seminal, call it product and marketing, a book called Crossing the Chasm, that I think illustrates pretty well why trends in these measurements are what's important, and the need to shift how you think about the product and the market over time. Now, the way this graph basically works is it's talking about 5 different groups of customers. The innovators that will, try an alpha product and be the first people in the door playing with your new technology, all the way to the majority, which is basically everybody, and the laggards who, are almost the Luddites that grudgingly accept the technology at the very end. And what happens to a lot of companies as they're building up products is that they get early success in selling it to people that have a higher tolerance for things that might not work well, or for a greater propensity to pick up the newest thing and play with it, but they fail to jump over and make their products appealing for that, majority of the market where the spoils and the treasures actually are. So when you're setting out in your product journey, or if you find yourself somewhere in the middle of it, I think really important to get a sense of where you are, and realizing that because the market is changing, right? The people that you're selling to is changing as you're trying to grow your business, your product, and that's the big P product, right? Not just the set of features you have, but the positioning, the price, how you promote it. All of this is necessarily going to have to be reinvented as you're going through. So you just cannot stay stagnant. And to go back to what Eric was saying, visualizing a lot of these metrics and these qualitative pieces of information as trends will give you a sense of, how you're crossing from one type of customer base in this model to another. They'll give you a sense of where you're starting to lose product market fit as you're trying to go more and more mainstream, and you will necessarily shift your view of the world and how you build your product. Eric, anything to drop onto the chasm model?
No, I think one of the challenges here is trying to identify and segment early adopters and early majority, right? And some hints I would give is, like, if you're a Silicon Valley company or a Bay Area company, and you're selling to other Bay Area companies, you're probably selling to, the innovators or the early adopters. So probably a good hint there. You're selling to people like you. And that can lead to some bad habits, because you're like, we have something, it's great. And then you start going and selling to, like, the Fortune 1000, and you're selling to banks, and you're selling to people that maybe are the early majority, maybe the late majority, but you're moving to the majority. They might have different concerns. So if you're over rotating and think like everything is great because, the people in the Valley are buying my product, and then you start going out to, like, Wall Street or whatever, and realize that, oh, why aren't they buying? Something's wrong with my sales or my marketing. It could be something's wrong with the product. It could be that you've done a good job in fulfilling, fit for these early adopters, these people that are like you, and not a good job for, addressing the traditional market. And it's a hard thing to segment on this, but there are ways you can get around that, like this hint of, like, hey, if you're selling to people that are just like you, you're probably selling to innovators and early adopters. So one of the things, that I like to see in startups, doing some in angel investing myself, is that, like, there's a small number of really, really happy customers. It doesn't have to be a small number, but the important thing is the second part of that, really, really happy customers. It's much better having 100 customers or 100 users that really love your product and are, like, sitting at the bar and, like, oh yeah, I'm using this product, it's amazing. Or, like, if they're on my Product Love podcast and I ask the guest, like, what's your favorite product? They're one of the ones that get mentioned, right? You want those people that are saying, like, I really love this thing. It's more important, I think, to have those 100 people that love it than those 10,000 people that are, like, grudgingly, like, yeah, it solves a need, I kind of like it, because it's easy to build off of that base and keep expanding from there. So I think, like, you want to be particular in making sure when you're establishing product market fit that you're establishing a really strong fit with a segment of the market, this small segment, hopefully a good small segment, and that segment is then something you can use to grow into other segments of the market, other areas of the market. So do something really well, establish a ton of value for some group of people, and then expand out from there, as opposed to the approach of, like, we'll have a lot of people that kind of like or like different parts of the product. So That's kind of one thing I would emphasize.
Yeah, so iterating often is another really interesting thing and an important thing to do when you're on the path to product market fit. And it goes back to a lot of the other ideas that we were discussing here, right? Like one of your biggest tasks is going to be to question every assumption that you've got, every learning that you develop and that brings you some success. You will eventually have to either make it a little bit better by, having a hypothesis of how it can be better, trying it out and rolling it back if it doesn't work, or doubling down on it if it does. And you're going to do this numerous times on the journey to your initial product market fit, and then in a different way with call it higher stakes, but every cycle thereafter. And the more you can do this, and the more you realize that it's an ongoing process, I think the higher chance of success as you get through this.
Yeah, I would say, adding on to that last point real quick is like, if you're doing a startup, whether you're in a product or marketing side, one of the founders or whatever, iterating, experimenting, learning, that should be what gets you up, right? That should be part of who you are. If it's not part of who you are, then maybe you don't want to be at an early stage startup. That iteration is just so important in launching new products. And then it leads to this whole idea of, this being a company-wide effort. I mean, I talked about this earlier. Not only is gathering this information, is iterating across the different departments important, but when you finally do get it right, it has impact on all these different departments. It has impact on marketing, it has impact on sales. Product's easier, sales is easier, marketing is easier, you're getting more feedback, customer success, it's easier getting those renewals. Support calls are generally more pleasant, even though they might have problems. Half of them are also saying, oh, by the way, I really love X, Y, and Z. Things get a lot easier. But you need to instill this mentality that getting this feedback, getting this information, and helping to establish product marketing fit is not just the job of a product manager or the product team or engineering or what have you. It's a company-wide effort. And the more people are involved in the process, the more everyone's going to see the benefit of the outcome of it too.
Yeah, guys, that was really awesome content. Thank you both, Mike and Eric. I mean, that was just really great stuff. We have a ton of questions here, so I'm just going to go ahead and hop into them. And guys, if we don't get to your question, we'll do our best to get to you after the webinar and get you some answers. So first one, Eric, I think this is probably a good one for you. So product market fit is powerful, but for some, it's a buzzwordy term that people will latch onto, knowing they need it, but without knowing really more about it. So what are some common misconceptions around product market fit, and what expectations need to be set accordingly?
Yeah, I mean, I think we've talked about a good bit of the misconceptions, that it's binary, that it never changes, that once you have it, you aren't going to lose it. All of those things are, common misperceptions, I think. But I think, what's important about it is that it's part of the mentality of the company, in that you think about it not as, an item, but as an abstract concept, right? As something that's guidance. You don't think about it as this checkbox. It's an abstraction, and you're using that abstraction as a mechanism for understanding when you're ready to do certain things in the company, right? If your customers aren't happy with the product, you shouldn't be hiring 10 salespeople to try to sell more people, right? So the idea of product market fit is trying to put together a construct for helping guide when you do certain things inside of your company. And if you use it that way, I think it's very good. If you use it as like, hey, we have product market fit, boom, it's not as useful then. But if you use it as this concept, as this abstraction that is used as part of your decision-making framework or your product framework and your criteria, I think it's more valuable.
Yeah, cool. So Mike, here's a good one for you. So how do you see collaboration between sales, product marketing, and product to really find that product market fit? So I think we've touched on that a little bit, but a little more color if you want to add there.
Yeah, I mean, it's the company's job. You can't go in the organization and point to one person and say, well, you own finding product market fit. We'll all just stand in the shadows and let you go off and do that. I think everybody brings, everyone in the company who's employed by the company has a role in crafting the customer experience of anybody who's doing business with you. And product market fit really it's probably better called like, customer experience / market fit. Like you need to be thinking about that whole motion from when the customer hears about your product for the first time, all the way to when they are supported post sales, when things go wrong. All of that together is what's going to lead to that flywheel and that word of mouth really kicking off. It's going to lead to customers feeling dependent and addicted to you, and it gets there through a team effort and no other way, really.
Yeah, for sure. So I think this might be actually a good question for both of y'all. Eric, we'll kind of kick it to you, and I'm actually going to combine two here because they're super related. So when you scaled sales, did you incorporate sales engineers, solution engineers, and solution architects in that? And then also, did you guys kind of have engineering involved in that, in like a cohort of rotating cross-functional weekly team reviews? So Eric, you want to kick us off on that?
Well, I'll answer the second part. We had engineering involved in a lot of the feedback. They were involved in the cycle. We had tight teams between product and engineering, and getting input from the different external parts of the business. We didn't have engineers that, if part of the question was, did we have engineers act as temporary sales engineers? That was rare. It did happen from time to time in the early going, but it was probably more rare. Some of when you hire sales engineering really depends on the product and how much you need sales engineering. If a salesperson can do a good job addressing all of the customer questions and concerns, then you might not need sales engineering till the company grows a little bit. You might need sales engineering earlier if there's a lot of technical implementation issues or conversations that maybe your salespeople can't handle. So a lot of it depends on what you're selling to whom, when you need sales engineering, I think. And so, it's very market product specific. I would say if you're able to sell stuff without sales engineering, then get started without that. But at some point, layering that in can be super helpful for doing things like, addressing privacy and security concerns, setting up demo environments, all that kind of stuff is useful.
It was essential for us at our last business because we were selling, although we started off by selling to every mom and pop developer who wanted to use the platform. We actually found that the problem that we were solving and the market that had that problem were established software companies, in many cases decades old. Like Oracle was one of our big customers, and by the time that we were acquired, I would say the majority of our deals, we had few number of customers, but they were all in the 6 and 7 figure deal size on an annual basis. So these were large customers with long sales cycles that were difficult for us to close and difficult for us to lose. And it became essential that we map to these organizations with like more than just a sales person, but a full like team of people to support them and keep them running off the ground. So it really will depend on, who your market is. And my answer is, if you realize that the problem that you're passionate about solving and that you have the capabilities on a technical basis to solve, don't be afraid of going that route. Like it's definitely more costly and in some ways risky to get started, but once you're over the hump and you've built that machine and you really understand that customer, it is awesome.
Nice. Yeah, good answers, guys. Appreciate it. So here's another good one. What is a good way to create a calendar and or process for customer feedback on new and upcoming features? Eric, you want to take that one?
I'm kind of biased on customer feedback. I mean, my calendar is every day. Like literally, I believe that you as a product person, and I'm addressing this to the product managers out there more than anything else. I feel like you should be interacting with the customer in some way every single day. And it could just be like jumping into the support queue and like seeing what people are asking and maybe even answering some of them. It could be a formal interview. It could be just going through and reviewing feedback you have and maybe replying to a customer. It could be in one of your Slack channels, just reaching out to someone that has used a new feature and asking them for feedback. I'm a big fan of like some little customer interaction, ideally every day.
Cool. And we're coming up on time here, so let's go for one more question, Mike, and I'll kick this one to you. So Have you used or considered jobs to be done theory to identify and evolve product market fit?
Absolutely. I've used jobs to be done theory since I learned about it maybe 5 years ago now is when I really drank the Kool-Aid. And I think about this, I use it for many things. I use it for packaging across different product lines and thinking about how they're segmented, thinking about how we're positioning our products towards different groups of people and making sure that the line of things that we develop, particularly at Zendesk, really meets that whole need. And it's used extensively when we're mapping out customer feedback and trying to organize everything we associated by jobs to be done. Very, very powerful and useful framework.
Yeah, I would
Awesome.
agree. I mean, if you haven't learned about jobs to be done, I think that's good to read. I mean, there's a guy, Bob Molesta, who's really well involved in it. He's a fixture on some of the tech scene. I know he's been out on the industry conference. He's been on a number of podcasts, including my own. So he's been on Product Love and other ones. So there's lots of ways you can kind of dabble into and look at jobs to be done. I think it's an important framework to have familiarity with if you are a product manager. And I'd recommend, Googling Bob Molesta is a good place to start. Moesta.
Awesome. Well, Mike, Eric, thank you both so much for this awesome content. We had a super engaged audience, so I think they got a lot out of it. And, to the audience, thank you all for taking the time to be with us today and spend this hour with us. If we did not get to your question, we're going to do our best to get you some answers here coming up after the webinar over the next week. So thank you all for your time, and we'll share the recording when it's ready. I hope everyone has a good rest of their day.
Thank you all.
Bye.